Okay, so today we'll be starting with understanding trend lines. Trend line, it is very, very important. Understanding trend lines. Are we there? A trend line is a diagonal. A trend line is a diagonal support or resistance line. A trend line is a diagonal support or resistance line that connects multiple prices. The forex market moves in three ways. The forex market moves in three ways: uptrend, downtrend, or ranging phase. Uptrend, downtrend, or ranging phase. The next we have types of trend lines. Types of trend lines. The first, ascending trend lines. Ascending trend lines, in bracket, uptrend. In bracket, uptrend. It acts as support. It acts as support. It acts as support, comma, connecting higher highs and higher lows. Connecting higher highs and higher lows. Connecting higher highs and higher lows. Starting from a swing low. 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 Are we there? The next, number 2, we have descending trend lines. In bracket, downtrend. Descending trend line, in bracket, downtrend. Act as resistance. Act as resistance, comma, connecting lower highs and lower lows. Connecting lower highs and lower lows. Connecting lower highs and lower lows, starting from a swing high. Starting from a swing high. And the third, battery horizontal trend line. Horizontal trend line. These are key support and resistance levels. These are key support and resistance levels. NB. The more time a trend line is respected, the more time a trend line is respected, so you put respected in bracket touched. The more times a trend line is respected in bracket touch, the stronger it becomes. The stronger it becomes. Okay, good. So we already know that the forex market moves three ways. It's either going up, or it's coming down, or it is ranging. Now all of this falls under the type of trend line. So we have said trend line is a diagonal support and resistance level. So under here we'll still be talking about support and resistance. So if you don't know about support and resistance, raise your hand up so that we'll know that we'll send you to the other row. So that when I teach it, I'll come and then repeat it this way. So if you don't know about support and resistance, raise your hand. Go that way. Okay, great. So trend lines now are support and resistance, but then diagonal. Diagonal means it's like this. Diagonal lines connecting prices in the market, telling us that this particular party is dominating the market. Follow it. Another NB, right? That the trend is your friend. The trend is your friend. Never trade against the trend. The trend is your friend. The trend is your friend. Never trade against the trend. Never trade against the trend. If you go to carry water is going like this. You want to go and carry it like this. It might likely carry you and go. So never trade against the trend. So if you see gold buying and going up, just be looking for where to buy. Don't go and look for where to sell, because there are more buyers in the market than sellers. So the moment you want to trade against the majority, it is finished. Stop loss is your friend, no longer the trend. So if the trend is your enemy, stop loss will be your friend. So the market either ascends. So ascending means it's rising up from 0 to 100. So it is also called uptrend or bullish trend or buy trend. And now we say it acts as support. Where do we buy from? We buy from support level. We buy from a low. So uptrend acts as support. When we say act as support, it means if you want to start drawing uptrend, you will not come and start from here and then drop down. No, you start from a support level and go up. It says connecting higher highs and higher lows. When we say uptrend, it means it is like a ladder. It is going higher, it is going higher. And we said because it is uptrend, we don't expect gold to just go like this. It's not a gun that will just fire. It is a trend, it is price. So uptrend connects higher highs and higher lows, starting from a swing low. Swing low means the lowest level in the market at that time. So higher highs and higher low look like this. It means gold is just going higher. So this is the higher high. This is the higher low. Next, higher high, higher low. Higher high because it is the highest high and it is a resistance level, while the low is the support. The next we have higher high, higher high. Now this high is called higher high because it's higher than its previous high. So this is a higher high because it is higher than the previous high. And now this is a higher low because the low is higher than this other low that was really down here at the floor. The next we have higher high. This high is also higher than the previous high. It means gold is going higher. Even the lows are getting higher. The next, this high is higher than this other low. So higher low, but then this low is higher than the previous low, and so on and so forth. Higher, higher, and gold is going up. Even the lows are hiring up as well. Higher highs, higher lows. So this is a typical uptrend. Now it says connect at least two swing lows. It means if we want to draw an uptrend, you want to start the trend line from here, then you pull it up. Then you pull it up. So this is a perfect example of a uptrend. It has first of all formed higher highs and higher lows, higher highs, higher lows. It means okay, buyers are dominating this market. Price keeps getting higher. The highs are getting higher and the lows are getting higher. It means buyers are dominating and I should be looking to buy. The next thing that you want to write down is trend line trading strategies. Write it down. Trend line trading strategies. So as we just explained one day, I'll tell you how to trade it. Trend line trading strategies. You can understand that the market that goes up or drops down or maybe ranging, but then you don't know how to actually trade it. Yes, if the market is forming higher highs, higher lows, where do I enter? That is why I am here. Right? Where do I enter? Now the first we have trend line bounce strategy. That's the first. Trend line bounce strategy. Trend line bounce strategy. Trend line bounce strategy. It means trading after a retest. It means trading after a retest or trend line touch. It means trading after a retest or trend line touch. It means trading after a retest or trend line touch. In an uptrend, enter at the higher low. In an uptrend, enter at the higher low. In an uptrend, enter at the higher low. That's it. Now, the first way to trade off your knowledge on trend line is trend line bounce. Trend line bounce means okay, price has bought, but then it bounces and touches trend line. So I want to enter. So you want to enter after a retest. You want to enter at a support level because all these lows mean support, while the highs means resistance. That's why at this low price bought, at this high is sold, because this is still support and this is resistance. This is resistance. Okay, support, resistance, support. So it says in an uptrend, enter at the higher low. So you can have your buy entry at this higher low, targeting the next level above. It means each time price retests, each time price touches trend line, each time price bounces there, it will touch there, then it will bounce and go up. It will not break it. It bounces there and goes up. So you want to enter at the bounce. So you have your entry here. You want to enter at the bounce, at the touch of the trend line. Then it rises up, you make profit. TP out. Now you wait again for the next retest. So when price gives you another higher low, you're like, okay, let me enter again. You have another entry here, TP at the next high above. When price retests again, when price bounces there and rises, you have entry at the next higher low, TP above. You have entry at the next higher low, TP above. So this is us trading off trend line bounce. So the bounce there means retest. Price is just dropping for a short retest because in as much as it is uptrend, there are also some sellers in the market. There are also people that are placing sell. So if just the six of us here, we are the only ones trading forex like now, like everybody has frozen. Only us want to sell. If Nelman, Mr. Logic, and I say, okay, no, we, Madam Lisa, that we want to buy gold. Then Clinton and Anderson say they want to sell gold. there are more buyers than sellers. It means even if price is in an uptrend, Anderson and Clinton, they are the ones retesting market. They are the ones making it retest more. But then the majority of us, we will make it to bounce back and go up. So we enter at the higher low, which is their support level. So everything still boils down to you understanding that a low means support, means floor, and price will bounce there and rise back up, unless otherwise. So this is the first way to trade or trend line bounce. So I'll demonstrate for downtrend, then I'll show you practically on the chat. But any questions? Remember what I said about questions?
Okay,
Yeah.
okay, let's say when you open the chart, like you see like the candles are already formed.
They are already formed.
Yeah, they're
Yes.
already there, and then let's say it's already in an uptrend.
Yeah.
So like, but how do you go about it to trade using Trendline?
Exactly. Now, everything I have joined here is with my hand. Oh. Is my hand the market? No. All these things in the market, they are candlesticks. So we will go there and see that it has formed already. Now this is gold. If you look at this gold, is it going up or down? It is going up. It means gold, it means this is uptrend, right? But then now, is it perfectly drawn? Like is it formed perfectly? Are you sure? We said uptrend is made up of higher highs, higher lows, and we start from the swing low. This is the swing low. So you can either take this or you take this. So let's say if we want to take this, we first of all identify if you are seeing the higher highs and the higher lows. That is why we have path. I think I should use my path so you guys know how to use it. That's why we have this path icon. So you first of all start from the swing low, click there. Higher high, higher low, go way up, higher high, came down, higher low. Now it has gone up here. Higher high, higher low. If we were expecting this uptrend to continue from here, gold should have given a higher low around here, like touch, then it continues. But then it has given equal low, which means a range. So you first of all pause from there. So here we can identify. So we can see a clear uptrend. Higher highs. This was the higher low, higher highs, higher low, higher high, higher low, higher high, higher low, higher high, equal low. Where do we have entries?
Entries at the higher low.
And the higher low and the support level. So if you had entered gold here, will you not make profit? If you wait for the next big test, then you enter here at the next higher low, you make massive profit. This is around 1,000 pips, even more than. So you enter at the higher low, you make profit. You wait again for the next big test for the sellers. You wait for them to press sell. After this, majority of us buyers now will buy. We enter the next higher low, we make massive profit. And now gold still open and gave a buy gap, which means buyers were still buying during weekend. So it bought up and this is profit. Now, if you took profit at the next high, you wait for the next weekdays, you enter again at this higher low, you might have still made a profit from this range. Now you now take a profit at this main resistance level because resistance means sell. Price will always sell there before it even thinks of breaking out. Now price got to resistance, it has sold. It has come back to support, which is still this higher low, and it is trying to buy back up. So that's the first thing. So the most important thing about trend line is not drawing trend line. Is knowing if you have seen a higher low, higher low. If yes, that is when you can even take trend line arrow and then draw it down. So let's try to take our trend line arrow and say this is it. We start from the swing low. Trend line must never kept in between candles. If you draw a trend line like this, don't ever come anywhere. So trend line does not keep the body of candles, but it can touch the wicks. So it can keep wicks, but it should never touch the body. Now, why do we say it can keep wicks? Because wicks are rejections. It means it is a touch, then reject back. So if you put it like this, you want to connect trend lines. This is the trend line. Now, has it touched like this? Has it touched like this? No, right? It means what we see in the books is not what you will see in the market. Now, if this trend line comes and then touches it here, it gives you added advantage that okay, buyers are truly dominating the market. It means okay, the trend is valid. If it comes again and then touches it and then move, it is valid. But then we should not dwell on waiting for the trend line to touch. Once you identify what makes up uptrend, you can have your buy entry. Once you know that it's formed by a series of higher highs, higher lows, higher highs, higher lows, you enter at the higher low, then you take profit at the next high. As simple as that. So normally in books, it will show that trend line will touch perfectly, but in the market, it will not just be touching the line like that. Because candlesticks might have formed inside. And now if you want to go and force it that no, this particular trend line it must touch, you go and draw an invalid trend line, which might make you now to be hitting stop loss because you will not enter at the right position. Because the fact that this particular trend line it touches this body, it is already a wrong narrative about the trend line. It is now instead giving breakout. So once you can identify a higher high, higher low, just enter at your higher low. But then if the trend line comes and then touches your main line, it's an added advantage for you. It's an added advantage for you. As simple as that. It means now at this point, the only reason why you should be buying gold off trendline trading is if gold goes and give us a higher high. Okay, it means the buy trend wants to continue. That is it. Any questions? You have to force it now.
No, it's not. See,
Yes.
me too, I've also suffered from that thing. Just now that you're clarifying, because I always looked at it in the
It must
I
touch.
went down and
The Messiah is here. The Messiah is here.
So that one is actually something that maybe it has filtered my mind. I don't know, but all the time if I'm there like that, sometimes I get frustrated. Honestly, I get frustrated. I always
wait for it to like maybe touch before. If you don't touch, I just conclude it's not a complete.
That's how I thought. But
I'm waiting now for a breakout to sell. But instead, the market instead of
going up
That's
again, so far.
That is it. Like that's why you pay mentorship here. That's it, right? So this particular notion it came about because myself I had the same issue when I started trading. Because you want everything to be perfect, you want trend line to come and touch, then you move, but you miss entry. Trust me, people that saw gold from this higher low and they kept on seeing higher low, higher high, they have held it and they have made like 5,000 pips. But then if you were waiting for gold to come and touch, this is the only time that gold touch. It has touched just 2 times. Now imagine you were waiting here. Let's see how many pips it has moved. So the first and most important thing is to identify the higher highs and the higher lows. So if this is clear, can we go to the next?
No.
The next now, so this is us trading off trend line bounce. Like trading after retest, you go. Retest, you go. So this is it. So let's take downtrend. So we'll take downtrend. We'll take downtrend. I'll demonstrate first. We said downtrend is formed by connecting what? Exactly. From a resistance. It is formed by connecting lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. What am I doing?
Oh, yeah, we're making this.
Yeah, on the lower high. Okay. Downtrend is formed by connecting lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower low, lower high, lower low. Lower highs, lower low. Now, lower high means okay, we want to sell, but then this is the high. Like we want to sell from this high, and this high is the resistance level. Lower low means the next support level down that we are targeting. So this is support, resistance, support, resistance, support, resistance, support, resistance, support, resistance, support. If we want to sell, are we selling from support or from resistance? Resistance. It means in a downtrend we have entries from the lower high. So if you enter the market and identify and you use your path, you identify lower highs, lower lows, lower highs, lower lows. You have entry from the lower high. So then the lower high is your entry point. So you're entering from the lower high, then you are expecting price to drop to the next support, then you take profit. Now this is the retest because there will be some buyers in the market. So the retest now is the bounce. After the bounce, you have the next entry at the next resistance level, at the next lower high, TP at the next lower low. After the retest, after the bounce, after the touch, you enter at the next lower high, TP at the next lower low. After the retest, after the bounce, after the touch, you enter at the next lower high, just like that. Retest, you enter. So when we are selling, we are still selling from resistance, dropping down. Next, we drop, next, we drop, next, we drop. So all of these, they are minor levels that you are just selling from. You sell from there, you target the next low. Sell from there, target the next low. Sell from there, target the next low, and so on and so forth. So this is the bounce. Now, for you to draw your downtrend, you start from the swing high, then you pull it all the way down. Downtrend has been drawn. Don't come and draw trend line from the lower lows. It's wrong. So you connect the lower highs because we are selling from the lower highs. While here we are connecting higher lows because we sell from the higher lows. We buy from the higher lows and go up. So in a downtrend, we connect swing highs. So we start from the lower high, we pull it all the way down. So is this clear? Let's see practically in the chart if this is how it is perfectly drawn. Let's look at gold. Okay, maybe we can use this one. Okay, let's see what happened on gold here. This is a resistance level, a sell level. This is support. Okay, downtrend connect swing highs. So is this a lower low or a lower high? Lower high. So this is a lower high. So we connect from there. We have lower high, lower high, lower low, 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 lower high, lower high, lower low. So this is a typical downtrend. The first of all comes from us identifying, is it giving lower lows, is it giving lower highs, is it giving higher highs, higher lows. So I've identified a lower high from a resistance level, from a sell level. So we enter at the lower high, then we target the next lower low. Because mind you, if we want to draw key levels here, this will be a key level. Rejection, sell, sorry, buy to the upside. So this is a support level. So we enter at the resistance and then take TP at the next low, at the next support level. Now you want to secure profit while you wait for the retest to happen. Because most times price might want to retest, it can retest and then come up safe and then change trend. So you want to first of all secure something small that you can buy it, even it's fish, and then eat first. So we enter at the lower high, then we TP at the next support. After the retest, after the bounce, after the touch, you want to enter at the next lower high, targeting profit at the next low. Now, if you want to draw a key level here, you see that this is still connect. So all of these are levels. So if you do your top-down analysis well, trading off trend line will be as easy as food. Because all of these lower lows, lower highs, they are key levels that you can market. So this is a buy area. So when price drops there, TP, you are out. The next lower high, lower low, you enter at the lower high, TP at the next level. Enter at lower high, TP at the next level. So you are entering after the retest, after the bounce. After that, you keep going, you keep going, you keep going. So this is the lowest low that price gave. From here, instead for price to give us another lower high, lower low, lower high, lower low, price instead gave a higher high. That is a high higher than the lower high. It means maybe trend wants to change you. Maybe buyers want to come into their market. So you will just as well stop selling and recalculate before you think of buying. Now after that, price retest and now we start seeing higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Yes.
That's why that's a question I forgot.
Yes.
So how do you know the trend is invalid?
Breakout, exactly. So this is A, trading off trend line bounce, trend line touch. The B is trading breakout, which is my best. Because for trend to touch is connection. Therefore trend to breakout is easy. Right. So the first is trading off trend line bounce. Every time it touches, you enter. Every time it touches, you enter. Every time it touches, you enter. As simple as that. So for a downtrend, we have entries at the lower highs, while in an uptrend, we have entries from the higher lows. Rather. Any question? This. So now we'll just let's use the past now. You can draw yours anyhow, but it should make sense. Now after that, you take trend line. Start from the high, the resistance level, then connect it. Remember, don't get across the body continues unless where the breaker happens. So let's what fill that gap. Remember what we said about gaps? Okay, what I shoot that one. Like I said, you want to monitor how the candlesticks are forming. Are they rejecting? Are they engulfing? All of that, it tells you one thing. And now this was Friday when price opened on Monday, market sold. So if the gap is down, it means it is a sell. Now price came back up to fill the gap. So you just want to monitor how the candlesticks are forming. Now after that, you have your entry. So you will always know that it is a higher high and it is a higher low. Just like for gold currently, let's not even go far. What's happening on gold here presently? What's happening on gold here presently? Identifying trend, one thing, value, uptrend, okay. But then now, as of here, we are expecting two things, a trend continuation or reversal. And now it's only a candlestick that will tell you that this trend has spoiled, this trend has reversed, this trend wants to continue. That's all. And now it still boils down to your support and resistance levels. If you break, you buy. If you break, you sell. That's all.
Meaning like we use all the strategy.
Everything you must join in. Yes, everything you must
To give
join
it
in.
perfect.
To give a perfect view. Because somebody like me, I trade support resistance. Normally, key levels mark, it's already resistance support. Now I trade trend line. If it is in an option like this, I will just know that okay, I should be buying. But then the candlestick is what tells me that okay, instead buying now or instead selling now. Yeah, so it's not complex. It's just everything that is on the chart at once. Because this is resistance, this is support. That's all. This is trend line. Now candlestick will say, okay, buy, okay, sell. That's all. The next we have trend line breakout strategy. That's the last thing on the trend line. Trend line breakout strategy. So I've looked at trend line bounce, which is the retest, which is the touch. Now we're looking at trend line breakout, which is the question Clinton asked. Trend line breakout strategy. Step one. Step one. Identify a strong trend line. Step one. Identify a strong trend line. Identify a strong trend line. Step two. Wait for a clear breakout. Wait for a clear breakout. Wait for a clear breakout. in brackets. Look for a retest. Look for a retest. Look for a retest. Step 4, enter a trade in the opposite. Enter a trade in a breakout direction rather. Enter a trade in a breakout direction. Enter a trade in the breakout direction. Enter a trade in the breakout direction. So step 1 was identify a valid trend line. Yes, we have seen lower highs, lower lows, lower highs, lower low, downtrend. Buyers, sellers are selling. Good. Step 2, wait for a clear breakout. Breakout means you want to sell. Price is selling, it is giving lower highs, lower lows, but then price comes and then instead of giving us a lower low, when price give us lower low here, it give us lower high here. Instead of giving us another lower low, a low lower than the previous low, price instead bought and give us a higher high. It's already telling you that buyers have first of all dominated sellers on this level. It means resistance level has been broken and buyers have pushed it up. That is one. The next, how do you identify breakout? I said 1 hour candle closing beyond trend line. It means if we are under 15 minutes and a bullish Maramuzo candle closes here, is this trend line still valid? From what I said, that look for a clear breakout in bracket 1 hour candle closing beyond trend line. So if we are on 15 minutes, as we are, and a bullish, like we are seeing downtrend, a bullish Marabuko candle closes here, is this trend still valid? Yes or no? You just yes or no. Let me know if you have a +2 marks or it's -5 in the exam.
Yes.
Use yes. You.
Yes, I can know.
You. No. You. No. Why no? Why yes?
Yes is because yes because it's what's the question again? Is it like the chance value?
Yes.
If the candle closes under 15 minutes,
Mm-hmm.
I was able because it said it must close under 1 hour.
Exactly, that's it though. So if we go under 30 minutes and you see that 30-minute candle has closed above here, this trend line is still valid. It is only invalid if you come to 1 hour. If you come to 1 hour and you see that it did not break it. So the 1 hour candle for a day trader is the most important time frame. It's the 1 hour that says okay, sellers, okay, buyers. So this particular market, it was said it was going down, going down, going down, going down. But the moment a bullish, this is a high momentum bullish candle broke the trend and closed above, sellers lost their power. Emphasis on close above. Most times, okay. Most times traders miss it and they have fake outs. So you might be hearing like fake out, a fake breakout. It means live breakout. Breakout that you have not waited for candlestick confirmation. It means if price came here and instead form the inverted hammer, is this trend line valid?
Yes.
It's still valid, right? Because the candle still close there below, not above. When we say candle close above, we are talking about the body. The body is the momentum. The body is what makes up the candle. So if a 1 hour, like 1 hour, that is 59 seconds, no minutes, 59 minutes has passed, then buyers still struggled to push sellers that were many, series engulfing here, engulfing here, but then buyers managed to push it consecutively. You see, buy, then they push it and their body close above. It means the trend has changed. It means buyers now want to take over. It means don't look for a sell again. Now start looking for where to buy from. And now step 2 says look for a clear breakout. Okay, 1, this is it, check. Step 3 says wait for a retest. Because when we say breakout, it will not just break and it's just going like that. Sellers are still in the market because remember it was a whole trend. And this trend, maybe it was like 1 week trend or maybe 3 days. It means sellers have really been taking time to really sell. So price will not just break out and start buying like that. There must be a retest before they buy. So wait for a retest. Now it retested to where? Support. So now you buy from support because support means buy. So you buy now from there support. So enter a trade at the breakout direction. Question.
So that's why I was thinking that like
Yes.
since the candle that closes was a bullish candle and it was above
It must. If it does not retest immediately, so sometimes it might break out and the buy is really huge because the momentum of buyers, they were really many. Even if it goes to heaven, it will still retest. Retest means a short sale, and not all retest they will have like momentum like this. So this one, it just happened because there were many sellers. That's all. Nothing special. There are times where price will break out and you see just a short return, then it continues.
That's what I understand. I thought retest would just be
No. Yeah. So retest can be very short. Retest can be one candle, one sell candle that will just sell and then reject back. So you must not have a very wide this hammer. It means okay, buyers are trying because hammer means buyers have rejected price, right? Rejected price to the upside. It means buyers are still barely trying, but we are still seeing majority of red candles. So you must wait until you get a full momentum candle. Once you get it, it tells you what to do next.
So, so if I put my TP at the level where you said
This high.
yes, that
Yeah,
high
resistance level.
level,
Yes.
and then just the week pops up and reaches that resistance level, I automatically.
Yeah, people hit and then close automatically.
Okay.
Yes, you hit and then close, and you must not hit TP. You must not. Oh. So there are times where you can be buying gold here. So maybe you were buying gold from this support, but then you set TP but at this other resistance level. So your stop loss is here, TP is here. Let's say you were risking $20. This length can be 1:3 like that. So you were risking 20, targeting $60. Now TP has gone up, like you have run in profit, you have gotten here, you have seen $40. Then you see a rejection candle. First of all, close it. First of all, secure 40. Because you have made profit on your risk. You have made 2 times what you were risking. So secure it first and wait for re-entry. So if you are in the Telegram channel, when we send signals like buy gold, do this, when gold runs, when we say like 100 people, we say close it first. Secure it. Have one that you see and smile. Because in the blink of an eye that it can go. Now, why do we close and gold? Because gold rejected massively from here. Rejected massively. You see, rejection can hammer. It means sellers want to push it down, and after that, sellers actually push it down. And now, and another trader like, let me bless Nailman. Another trader like Nailman, you are saying price at resistance level. You know that resistance means sell, so you can have another entry from here, targeting TP at the next support. Price got to support and then instead gave the hammer. and then closed here. So hammer is a bullish rejection, while inverted hammer is a bearish rejection. It is rejecting from up, dropping down to sell. It is rejecting from an up, rising up, because buyers are trying to get into the market. Any question? But you need to know how to trade off it, especially the breakout. That's why people like me, like, I don't really like me trendline touch, because maybe it will be difficult to see the lower lows and stuff. But then trendline breakout, when a trend breaks, is massive. Imagine a whole trend breaking. So we were looking at gold on the 50 minute. We saw the uptrend. Even on the 1 hour, it's still uptrend. But in this particular trend line, it will only break. It will only be considered broken if it sells, like if it sells now like this and breaks here with the body closing below here. It means trend has changed. It means it is now trying to form the down trend. That's it. But as of now, gold is still in an uptrend. Now we should be looking to buy. Now, if you are looking to sell gold, it means you want to trade with the retest. You want to have short sales. That's all. You want to have short sales, like you want to sell from here, then you target TP here at the touch of the trend line, because you can clearly see that it is 300 pips, which is money. But if you know where to really pick it from. Any other question?
There was one day I traded the other day, and that pair seems to be faster than gold.
Which one?
Silver.
Silver. XAG USD.
Man.
Silver is volatile, but I've never opened it. So you can use this same knowledge and then apply it there. It can become your faith. Maybe you can come on the session later. But I'm saying now, buy silver now. I'll buy it now. Yeah, silver is
You also have this other guys that are trading, they say they're trading synthetic pairs.
Synthetic indices. Remember, I mentioned like US 30, NASDAQ, all those things. Those are indices. But synthetic is a different thing because they have like volatility, stuff like that. So it is not forex, like it's not currencies. Yeah, something different.
You can still use this strategy and apply it.
And then trade it, and you make more money than them, because majority of them they don't know this our things. Yes, they don't know it. They don't know it because now if you are trading synthetic, you can use loss as one. That our forex gives you $10 per pip. That's their own loss as one. There is like loss as 0.01. Like it is their pip count is slow and then it's low. Yeah. So trading there, you need to be telling like not like 10 before you see money. Okay, so that's
another issue.
Any other question? Or let me ask. Because after this, when we do patterns, we're done with technicals. We start with fundamentals. We start hearing NFP, CPI, FOMC, interest rates, how they affect market, and everything that we'll never do anything abstract. Everything that we do here is to know where to buy and where to sell. That's all. Okay, if you don't have, let me ask quiz. And if you don't answer -2, if you answer wrongly, -3. If you try and then answer rightly, +5.
I'm in +2.
Yes.
Me too.
Yes.
I know.
People say yes.
Said no.
Yeah, so both of you have -2.
Is there?
Yes.
People say no now, which was wrong.
No.
No.
You said no.
The question was
You said
we were on 15 minutes. I said if a 15-minute candle closes beyond trend line, is it still valid? People say yes.
no. We said no. Instead.
Wait, you said so you wasn't saying.
Instead, they said yes. That's what I'm telling you.
They still yes.
I understand.
No.
When you
Because
closes,
you guys said
yes,
yes.
the two of them said yes. We said no.
Then
Then your reason was right.
Yes.
But it's still valid now.
It's true.
No.
No, you said
Yes.
yes.
No,
One hour time frame
no.
that was valid.
Wait,
Wait,
like
class.
We were on 15 minutes.
Uh-huh.
I said, if this 15-minute candle closes,
Is it still
is
valid?
this trend line still valid?
Yes.
Yes. Because you said yeah, you confirm like you only
That
confirm
answer is
on 1
that
hour.
answer is question. That question is cancelled. It's cancelled because now I'm lost. Because 15-minute candle closes does not invalidate trend line.
Sorry.
So it's
Okay, they are right.
Right.
Because I said, is the trend line still valid? Which is yes. So it is the 1 hour candle that must close.
You did not specify it.
I
You
specified.
said 1 hour
I specified.
candle.
If you lie, minus 10.
No,
Oh.
we're on the 15.
If you lie, minus
I'm not
10.
lying. We're on the 15-minute
Yes.
time frame.
But
Right?
yeah.
So you said it closes above the 15 minutes. You not
Is
specify
it
whether
still
it was
valid?
is it still valid, but
Yes,
you
I
not say
said
1
15.
hour. You not say
No,
the same.
I don't need to say it.
Because you already said it before.
Is the answer. That says a breakout only happens when the 1 hour candle closes beyond trend line. So now I was just teasing you saying if this 15-minute candle closes beyond here, is this trend line still valid? Yes, which is yes. So trend line questions. I'm pointing.
Trendline questions.
Yes.
I forgot from there. No, stop that. What do you mean? You're starting from the left to the other. See, I don't want to point the same. Say I'm an example.
Neilman, how do we identify an uptrend? Fast.
Option. We identify an option using 6 or higher lows.
Okay.
Correct.
You must answer taking before you have +2. Anderson, when a trend line has multiple touches, what does it mean?
I mean, it's a strong trend line.
So what do you mean by a strong trend line?
Means if at any time the future price happens to reach at that point, it's
You respect.
Yes.
Okay. Mr. Logic, should a trend line curve across bodies and why?
No, man, the trend line should not cut across bodies
Why?
because when it cuts across bodies, it indicates the trend line is no more valid.
It indicates it's not possible. Yes, true. Or not properly drawn, yes. Okay. You now.
Backside.
How do we identify a downtrend?
The downtrend is identified through candles movement on the chart downwards.
When I asked Leoman, how do we identify uptrend, what did he say?
No man, you yourself.
I said like identify an option using 6 or higher lows.
So for downtrend,
Lower highs and lower lows.
lower highs and lower lows. Mr. Logic, where do we have entries in an uptrend?
Uptrend. We have entries on higher low.
Higher low good. In a downtrend.
Lower high.
I will minus marks. Clinton, what does trend line breakout indicate?
The change in the trend direction.
Exactly. So when the trend change, should we just enter Newman? Why? Wait for retest. Okay. This one is +5 questions. I'm not pointing. What is the difference between a breakout and a retest? Difference between breakout and retest. Yes.
For a breakout, we are looking at the complement. The 1 hour candle must close
beyond.
beyond.
Mhm.
While for a retest, it's just a small pullback. Then the trend line is still very, very respected.
Exactly. So, though you're not selling well, give me one mark. Because breakout means reversal. So, breakout means reversal. Why? Retest means pull back, just to validate it and then pull. But then breakout means it has changed. But retest means it is pull back just to validate it and then move. Okay, that's good. In this class, if you are not heard, best student, the way I spoil my best student.
Right, because
And the previous batches,
you take
prof
a
then I give you trading in the zone book. When you read that book, you'll be making money on it.
I take us to Dubai.
For common theory.
Don't do that to marry.
I'll take that because you know once you become here to come and trade, I'll be checking your trade history. So if you have been if you stop loss with your bestie, you cannot enter Dubai.
Sure.
Exactly. You better break even or TP. Don't be hitting stop loss. Okay. Which other question? Okay. Okay. If you sell from a lower high, where should your take profit be?
Tiger TPR lower, next lower.
Next lower, excellent. While if you buy from the higher low, where should TP be?
Next higher.
Next higher.
Next higher. I have courage.
No,
You will not be sitting there. As of tomorrow, you'll be here because tomorrow's topic is the sweetest chat party. So you'll be here.
sure.
Is there okay. What would you do in a ranging market?
You don't do
You rest.
you don't want to think enough about that one.
Why?
That's the most frustrating one in every mother. Those one impression.
Yes.
It's like, oh,
Because price can just want to breathe and just hit you stop loss here. Price can want to breathe out and hit you stop loss above as well. So ranging market is very very risky because if you sell you might hit stop loss. If you buy you might hit stop loss. So better wait for a breakout or retest then you can enter. And and an uptrend is the same as resistance, true or false?
true.
Ha!
Excuse me, are you talking about an uptrend line or just the former?
Which one is uptrend line? What is uptrend? Series of higher highs, higher lows, connecting from swing low.
It's support.
You say uptrend is minus 10. Remember me, oh. That means you're working out but on 90 in the exam.
And I'm working on it. But
Both of you are writing see it tomorrow. So you can't end so that you write it before
Man,
you
but
come to our
I'm
class.
having Changu now.
Yeah, we have to there. Then you have had the biggest
No
comeback.
one can work at a rate where I can
Jesus. Okay. A downtrend is the same as support. True or false?
false. False.
A downtrend is the same as support. True or false?
False.
But
True.
who said true?
I'll say false.
I didn't say anything.
wrong.
I didn't say
I said
anything.
false. I said wrong.
When you were against him,
Me?
it means you were for true.
No.
Okay. A downtrend. Downtrend. We start selling from resistance. It means downtrend. When you hear downtrend, it means price is selling from resistance. Uptrend is the same as support. It means we buy from support. Sometimes we just say nah. Spirit of witness memory is stored on them. Okay. Would you wait for a trend line to touch? Yes or no? And why?
No,
This one is a personal question.
No,
no.
Why?
because there is nothing like a perfect trend line in all cases. You can usually just see an uptrend with your trend line not hitting the lower
The
lows,
line.
the lines or whatever, but it keeps going up. So you look for a trade, you look for an entry within as per how the trend line moves on the chart.
So if the market is in an uptrend, where should you look for entries if you can identify it?
At the
Exactly. At the higher lows, you just go up. Now, if the trend line comes and touch, okay, oh, thank you, God, we'll just continue. But then if it comes and then touches it and then breaks out, we sell. How can trend lines be combined with candlesticks? Mr. George, say something.
During breakout.
Yes.
So I can come.
That's the only time. Yes, breakout if it drops and then one hour candle closes here means he wants to sell now. But remember, still at this our higher lows, we still need candlestick there. Because you will not want to take a buy at the higher low when you see a rejection candle instead. So at this higher low that we want to buy from, we expect to see bullish rejections like hammers, shooting no not shooting star, like hammers, spinning top or full momentum bullish candles. And I'll see the candle that formed here. You see rejection candles. Now you want to look for minor levels around where around price, around previous price. So let's say this is what had happened previously. Now your next entry, you see it's a minor level. Now your next entry now is see all these rejections here. It means price wants instead go up. So the moment a candle closes and the body of the candle is above your minor level, you can have your buy entry. That's why people who wanted to trade here, they'll take long. You put your long position in. Stop loss should always be below trend line. Then I'll take you at the next level that you're targeting. That's it. You have already made profit. So what gave you confirmation here? Candlestick, bullish rejection candles. When you saw them, you would trade. But then had it been you were here and then you kept on seeing inverted hammer, it means maybe the trend wants to even change. So you will not enter the buy yet until you have seen the candlestick that confirm your buy. After like you buy, then TP at the next high. Leave it like that. Look for the next lower high to enter from. Sorry, the next higher low. Enter there, then TP at the next level up. So that's how we confirm trend lines with candlesticks. So assignment. So now I'll give the homogeneous assignment. So if If everybody has done same, then yeah, yours is different. I'll just like the person that is wrong. Or if everybody has done same and yours is different but right, everybody is -2. So assignment on the pair USD card, yes, USD card has clear trends. On the pair USD card and Euro USD, because we have done for gold already. On the pair USD card and EU, identify trend lines, identify trend lines, identify trend lines, and place buy or sell entries. And place buy or sell entries. What does that mean? Simple. If you go on EU and you see uptrend, draw your uptrend. Then you use path to mark it. Just put the high, the low, the high, the low. That's all. Then identify the buy and sell. Set your buy or sell entry. You know uptrend means buy, so you should take long. You come. You just put where you buy from. You buy from the lower high. So you just place the buy entry at the lower high. So this is to assure me that you know where to buy from. Stop loss must always be below trend line. Then I'll TP at the next level up. That's all. You come to the next lower high. Higher low. Place it there where you buy from. So this is all I want you to do. That is all. Now we have identified a downtrend. Downtrend here. We have the sell. So you take the short. You want to sell on the lower high. Stop loss slightly above trend line. TP at the next lower low. Just like that. For the next entry where you enter next. Remember, stop loss should always have protection. Always protect stop loss. So this particular level is protecting stop loss. Just like that, just place where you sell from. In this case now, trend line protects stop loss. TP at the next level. That's all. That's what I want you to do. Is it clear? So you're doing it, you submit it before class. Now I'll come and give you answers there in class. Then Anderson and Kinsey.
So
I'm not hearing sorry, I'm getting a minus. Only you minus 10, minus 2. Okay, they're working on 8 now. So you write the CA tomorrow. It's very, very simple. It's on 20. Nelman and Mr. Lodge, they have 20 on 20. I am expecting 21 on 20. So if we don't have any other question, then I'll see you tomorrow.
During like what they say a retest
A retest, yes.
along the minor key level.
At the minor key level. You know, you need to be talking with charts.
Yeah.
Yes, you are not just talking now yet.
Because I saw a retest at the minor key level
On what pair?
on gold.
This is gold.
Yes, and I thought that was a breakout.
You saw it as a breakout.
I saw it at the minor key level and I thought maybe I should not conclude.
That is a
a breakout.
breakout. So retests are not breakout too. That's why you need to first of all, okay, just first of all draw something, like draw it first. So that you know that okay, if anything touches there and does not close below, it is retest. So I should continue either buying. Yeah, so retests are different from breakout. Retest means it wants to continue. Breakout means it wants to change. Like it is changing. So retests are not breakout. And now from here, from how gold gave higher high and then it came and gave now equal low, it has entered a range. So we must wait for it to leave this range first because now it is very, very technical. Very, very. So if gold goes up now and gives us higher high, that is a high higher than this one, we will buy. But if gold is if it drops and then gives us lower low, we will be selling because might be gold now wants to form a downtrend from here. We invest out, so we'll just wait. So breakouts are not retests. Then we have fake outs too. Fake outs happen when you don't wait for candle to close. Fake outs happen when you don't wait for the candlestick to close. Now imagine that gold goes up here. Imagine that, okay, let's use down. Imagine that gold drops down. You see it around 45 minutes, like now. So it's left 15 minutes for this next candle to close, right? Now imagine that 15 minutes left, gold is seriously selling, it's going down. You just enter, let me just sell. But then in the next like five minutes left, it rejects back up and the body closes here. Fake out. It has deceived you that sellers want to push it. You just enter impulsive. You did not wait for the one account to finish forming. That small 5 minutes, it just fakes you out. Then it comes back up now, hit your distance stop loss and you're finished.
And you shout.
So that is fake out. So fake out happen when you don't wait for the candlestick to form properly. So that's it. So now we'll just be monitoring how the candles here are forming. So that's it.
Then I don't know whether we'll have another day for a class on those candlesticks. Candlestick sheets, properly identify them.
Yes. I sent it to the group, right? I did not send it. But I gave assignment on this. You have never done it. That's why you know this candlesticks now. Then one did he sent it to me, identify hammer, inverted hammer, dragonfly, spinning top, marabuzo. So all of these are names. And now I simplified it and said all of these fall under three categories. You either see it as high, indecision or rejection. Yeah, so